Welcome, welcome. This is My Favorite Mortgage Podcast. I'm Jamie Booth, a licensed loan officer in Arizona and Texas, and you've tuned in to a newer podcast that allows you behind the curtains of the home buying journey. My special guest today is Pablo Elias Hopkins.
Yes.
Right?
Yes. Elias Hopkins, yes.
Elias Hopkins.
How are you?
Thank you. This is your second time you've been on.
Yes, thank you for getting me another opportunity to be here.
Well, you know, we work together in the office, and so we're constantly always chit-chatting about transactions and
the crazy mortgage business.
yes, yes, and it's been extra crazy on top of everything. End of the year, new year, and we have cyber attacks on major companies, title companies, and we're going through something similar as well.
Yeah.
So this has been super fun to start the new year.
It's a nice 2024 start.
Yes. So I wanted to do something special. We have asked people in the past, if you have any mortgage questions, to email in at myfavemortgage@gmail.com. And we have compiled a list of some really good questions from listeners and potential buyers. And hopefully we can answer some questions that other buyers may have. Are you up for a little Q&A?
Sure.
Okay.
Let's give it a shot.
Okay. So again, this is throughout the last few months. Okay. What is considered a first-time home buyer?
Just someone that doesn't have a property or a mortgage currently, pretty much. Because you can have a property free and clear.
So you're still considered a first-time home buyer, even if you don't have a mortgage, but you own a home, so you're on deed.
Yes, sometimes.
And what is the rule when it comes to being a first-time home buyer again?
It has to be mostly your primary residence that you have to be trying to buy, obviously.
So this potential client, said, what if I bought a home over 20 years ago? Would they be considered a first-time home buyer if they're not on that deed anymore?
Yes.
Okay. Here's another really great question from a listener. What is the best way to set yourself up financially in the ways of buying a home for the new year? How and when should I pay off debt?
It depends, but you can also always pay your debt at closing, meaning that you can guarantee that you're getting the house and not just paying out debt. That's something that I always recommend all my clients. Like, you'll qualify if you pay X or Y, but don't pay it right now. Just save the money for the accounts. You can pay it with your down payment and closing costs include. You can just add it up.
Yeah.
It depends also if your credit is low. You start with your revolving balances to get your credit up.
Yep.
So there's always reach out to
let us take a look.
Yes, to a loan officer. And it's an easy thing to review. It takes not more than 15 minutes to tell you, to at least give you a pathway or where you at and where you could be in the near future.
Someone asked me if I would be willing to put them on that path, and they asked me how much do I charge for that.
Oh, it's free.
Yeah. And I said,
how nice, huh?
Yeah, I said there's no charge. This is something that we like to do to get you the right information and the right journey to get you into a home.
Yeah, that's something that I like about my job, that people think that they're afraid to contact me because I'm gonna
charge.
First of all of them, even if you close, it's free, pretty much, because we get paid by
from
the bank.
Company.
Yeah. So the company pays us, not the client, not the seller. No.
Right.
Not like the agents, like sellers pay their commissions.
Right. We get paid by our company.
Completely free, and it's on all of our best intention to get you the best deal.
Right. And I told them that. I said, I don't charge for this because I just want to pass on my experiences and what we've done for others to help more people into a home. So best way to set yourself up financially is talk to one of us. Let us take a good snapshot of your finances right now, and we will advise you on which debts to pay off if we need you to. Otherwise, we may not need you to do anything.
Sometimes people think like their student loans they're gonna affect them, and it's just a percentage that we use.
A very small percentage.
Very small percentage that we use toward hitting them with the debt to income ratio. So there's tricks and that we can always do. With collections, anything below 2,000, it's just removed. So
and medical collections.
Collections you don't even take into consideration. So there's a lot of things. Every client is different. There's no, obviously the perfect client is like the no debt, no 2 years, 6 years on the same job, and $100,000 in the bank. But that's
for the most part. That person doesn't really exist.
No. Most of the people struggle. But it's not a struggle if you talk to someone that knows what they're doing, because it's easy. It's something that you could do quick.
And I will then email and say, I want you to go pay off. And we put it into a plan. Number one, go pay off this credit card, and then go to the next step, and then the next step, and do other things like Experian Boost.
Yes.
I like that one. I'm not getting paid for that, but I do like that because you could report your electricity, your cell phone, even Netflix.
Yeah.
You have a Netflix?
Netflix too?
Yes. Netflix.
So now.
And you could put on Experian Boost,
cool.
and you pay that on time every month. Get credit for that. Rent, insurance.
No, definitely. There's a lot of tools. There's a lot of tricks. It's just a matter of talking to
the right person.
Yeah.
And guys, we look at credit reports all day long.
All day.
When the systems are up.
That's true.
And so we know what has worked for the hundreds of other people that we have looked at. In fact, I have a success story. I have a client that, we were still okay. We were a 644, and we were getting down payment assistance. But there were 3 small, and I'm talking like less than $1,000 on each of them. Maybe one was like 190. I needed their credit score higher so that we can go to a higher debt to income ratio.
Yeah, to the 680.
680. I needed a little bit of movement.
Yeah.
So, and these were like, tell us what to do, so open and willing. And I said, I need you to pay off these 3, then get me these letters. And we do something on our end with a proper letter that's written out how we need it to be from those creditors. We can do a rapid rescore. We don't have to wait 30 days as normally.
7 days, 5 to 7 days usually.
So I submitted this. They got the letters. They did it that day, paid down these small credit cards, got me the letters. Yeah, some of these companies took a day or 2 to get me the letter.
It depends, but still, you get a house with a down payment assistance.
Yeah.
You can bump your qualification.
Yeah, you can borrow more money if you have a higher credit score.
Yeah.
And within 10 days, we got them to a 717.
Nice.
644 to a 717.
They can go refi every loan they have now.
Yeah, exactly.
They'll get a better deal.
They were good. They don't have anything right now. They paid off these debts, but in the future, because we got them this score and now they're getting a mortgage, you're right. When they go to buy a car,
anything,
they're going to have a lower interest rate because of these
lower closing costs.
Yeah. So that was pretty cool. One more question. Have you ever done a loan for a person with no credit score?
Yes, a non-traditional.
Tell us a little bit more about that.
So those having no scores is better than having bad scores. Okay?
Yep.
So people think, I don't have any accounts, but open or any credit cards or any
Right.
or a card. You don't really do a lot of credit with
Right.
with cards, but you always have insurance. You always have your rent. You have your
Utilities.
gas, anything. So you can do. What you need is a letter from each creditor or each company that you have been paying on time for
Right.
the last 12 months. And
Like a reference letter.
it's a reference letter. yeah.
Perfect.
And then you get a proof of of your last 12 months of rent that you have been paying on time, and you get qualified based out of a 580 FICO score, which is the lowest you can qualify, but you qualify.
You could still get a
You
house.
can still get a house, no
Yeah.
problem.
Yeah.
We end up adding those accounts to your credit report.
So we kind of, in theory, we're going to generate a credit report for you
Exactly.
with this non-traditional credit.
That's correct.
And so FHA is typically, where we'll go with that. So you'll need, your 3.5% down
Yeah.
payment. But yes,
Reserves as well. That's something additional when it comes to low down payment, low FICO scores, or low or non-traditionals. It tends to be the down payment and have a little bit saved on the bank. They usually like to see 1 to 3 months of the
Right.
actual payment that you're applying to.
Right.
And sometimes it even change the qualification when you have a low scores and you add reserves, you get an approval, a DU approval that we call,
Yeah.
instead of a manual underwriting, which we can still do, right? We can still manually underwrite your file.
Yeah.
Um,
There's more rules to manually underwriting, lower debt to income ratios.
But reserves, sometimes you can use your 401k and IRA. I think stocks too.
Yeah.
Reserves.
Well, and reserves in our world is we don't need you to use that money.
It's just show it on paper.
Right. We want your file stronger because maybe one of the boxes that we need, credit, isn't there. So we're going to ask for this other box, which is assets, stronger. And you don't need to go spend that money or use it, but just have it there as reserves.
Available for your 3 first
Yeah.
monthly payments.
Yeah. It just makes your file stronger.
Yes.
Well, I thank you for answering those questions. Those were some good questions.
Yeah.
Yeah. I have a few dad jokes.
Okay.
What do you call a snowman with a six-pack?
What do you call it?
Oh, gosh. What is this? How do I say this word again? A dominable snowman? Oh, it's from the six-pack. Oh, my gosh.
I thought it was a 6-pack of beer.
Yeah. Call a snowman with a six-pack. Okay, an abominable snowman. All right, gotcha. Abdominal. Blah. Okay, you could tell I don't work out. No six-pack here. Why are icy ponds bad actors? Or bad podcast hosts?
No, I don't know.
Icy ponds are bad actors because they keep cracking up. Oh my gosh. Do you hear the garbage truck in the background? Wow. I'm so sorry if you hear that. Is it? Or some sort of tractor trailer? Wow. New Year's resolutions is to stop procrastinating. So I'm going to start that tomorrow.
Yeah.
Any New Year's resolutions for you?
For me, well, business wise,
Sure.
Try to help more families get into, especially now the rates are dropping.
Yes.
Everybody that got the opportunity to buy a house last
Right.
year, will try to help them lower their payment as quick as possible.
Right.
You know?
Right.
But yeah, try to get more families into a
Yeah.
house, you know, or just help them, people with houses too, you know, help them through financially.
Right. You know what's been
Mm-hmm.
really popular is the cash out
Yeah.
refinance.
So a lot of people are in major debt, and but they're sitting in tons of equity.
Tons of equity.
So it's just a matter of do the numbers. Sometimes it's better to do the cash out and consolidate your debt in one. Probably it's gonna be less of a payment overall, and then hopefully in the future you can still lower that payment
later.
Yeah.
I know a lot of people are saying I don't want to lose this rate that I got in 2020 or 2021, but
it depends on the situation. Like if that's the only way, it's either sometimes it ends up I have to sell because or they want to buy a new house but they don't want to lose the other one, and you can rent it out, but sometimes
that's not going to help you pay off the debts that
you can't do both sometimes. It depends on the equity, but
I mean, we have so much in equity. And then that article that came out a few months ago said that consumer credit card debt topped $1 trillion. Like, that number is just... So my husband and I were like, it's a 999 million billions. And he's like, no, it's not. I'm like, yes, it's like billions. And I can't even figure out the math to go to $1 trillion.
It's too much.
Just tell me how many 999s.
It's huge.
It's huge. It's huge. And if you want to get out of that, we can help.
Yeah.
We can absolutely help. We'll do what we call a combined mortgage, or a combined rate, and see your mortgage may be a lower rate now, but if you took those higher interest rate credit cards, what's the overall rate? We're going to be able to lower that and use the equity that's just sitting there.
Yeah, for sure. And then we all think, and it looks like 2024 is going to be a better year for interest rates. So credit card interest, it's fixed. So and it's much better. Something that you can always start tackling down, and it doesn't matter if it's not a huge saving right now, but you can still
prepay, pay extra. I think the average credit card interest rate is over 20. I mean, that's crazy. So, well, any other New Year's resolutions? No.
Just try to be better.
Do more in 24.
More.
Yeah.
It has been a tough 2 years. But
I didn't think it was going to last that long.
No, me neither.
I kept telling my assistant, hang in there. It's going to get better.
No,
This was a long haul.
I remember helping a client, like, right at he got a 4.75, and he was like, I don't want to buy. Like,
right. He thought that was a bad rate.
Yeah. And I'm like, you should do it, and you're going to thank me. Later.
Yeah.
And right now he's like, oh, like,
we can't touch that right now without tons of points.
And just the cost itself to get into the same house. The house kept
appreciating.
The value of the house is higher now. His rate's lower. His payment's lower. So he rents out the some rooms. Because he's
house hacking.
So he's like living the dream right now.
Good for him.
Good
for them.
And he just needed a little push.
Because when we were starting to see that rise in interest rate in 2022, it was quick. It was like 3%, then 3.75, then 4.5, and then 5.25. And
the moment it got from the 2s to the 4s, that's when I realized, like, this is going somewhere. It's gonna be hard, and there you go. A year and a half later.
It reminds me of the anchor man. That escalated quickly. That really got out of hand fast.
Yes, it did.
It did. And we're still in the 6s. And I've seen some 7s too. We're still in the 6s and 7s. And we're actually saying, oh, good, we've gone down a whole point since October.
Oh, the 8.5, that was scary.
Some down payment assistance had 9.125.
No, down payment assistance, they're going to get better this year too.
Yeah.
Because most of them you're borrowing money to 4 years, 5 years. Some of them are forgivable. Some of them are 10 years.
Yeah.
It depends, but
some of them are actually a second loan altogether with another payment.
And you're paying 2% rate higher than your current
mortgage.
Loan.
Yeah.
So if you get an 8 and you use that, you were getting a 10% on your down. It didn't make sense.
Yeah.
No.
So we've seen some relief.
Yes, for sure. Less cost too. Less.
Yeah. I really, really do hope we just land in a nice 5s.
Yeah.
The 5s. Like, that is a beautiful rate.
Yeah.
We're not going to see a 2. Sorry.
Not this year.
Well, I was going to quit all my bad habits for New Year's, but I remember nobody likes a quitter.
No. Don't do it.
Nobody likes a quitter, but maybe I could be a stop. I'm going to stop my bad. Everybody likes a stopper. I don't know. Oh, we've been, this last few weeks, man, we've had title companies that were hacked. Our own company even suffered some sort of cyber incident. This is, Mr. Cooper, us, title companies, several of them.
And it's a matter of who's next.
Who's next? Yeah.
It's just...
Yeah. And when you work for a bigger company, we're going to be a target sooner.
Yeah.
Our name is out there. When you're nationwide, we're going to be a target sooner. Yeah. But man, this has definitely been an eye opener.
It's a nice start.
Yeah.
To the year.
We're like, what are we going to do?
It can only get better, right?
Yeah.
That's
Lessons
what
learned.
I'm thinking. It has to get better then.
Yeah. Yeah. Well, again, Pablo, thank you so much.
Definitely.
For coming on again. You are my go-to when I have bilingual clients, and a lot of my realtors are bilingual. So you've always taken great care of those leads and those clients, and I can't thank you enough for that.
No, thank you for trusting me.
One of these days, I'll have you teach me Spanish, but I learned trucker and sailor, and I can curse like no tomorrow, but Spanish, I'll leave that up to you. If anyone has any questions, English or Spanish,
yes.
What's the best way to get a hold of you?
My cell phone is 520-271-1140, or you can email me. It's PEliashopkins@loandepot.com.
And we'll put that information down in the description for the podcast. Yeah. I am Jamie Booth. I'm also available for any questions whatsoever on the home buying journey.
Yeah. And Facebook. I forgot about Facebook.
Yeah, we're both on Facebook.
Just Facebook me.
Facebook, and you can find me on my favorite TikTok. We'll be making some TikToks today, but we want to thank all of our listeners. For anyone who subscribed in 2023, thank you so much for your continued support. We're going to make 2024 a great year. We're going to get back online, and we're going to do some great interviews with really some good heavy hitters that are scheduled to come on this year. So please subscribe, like, share, give us any kind of comments or feedback. You can reach me at myfavemortgage@gmail.com. Would be happy to answer your questions. And you may be surprised at how many other people have the exact same questions. So don't be shy. Email in. We will try to answer those on air. And follow us, like us, rate us. We'll see you next time. Thanks. Bye.